Reports from some of the UK's major finance brokers that we're now at a situation where 85% of lenders that were in the market pre-coronavirus crisis are now back in the market overall, which is good news for the property industry and keeping business moving overall. Now, that said, being back in the market and being completely back to normal are two slightly different things. As a landlord, as a property investor, even as a homeowner looking to get a mortgage or a remortgage at this particular point in time, be prepared that you may have to go through more hoops. Reports from the industry overall is that lenders generally are asking a few more questions, going through cases with a bit more of a fine-tooth comb, especially for high value loans or for loans that are a high loan to value as well. A number of lenders have removed or tightened up the criteria on their highest loan to value products. Quite a few lenders that exited the market and came back in might have come back in at sort of 60, 65, maybe 70 or up to 75% loan to value rather than being any higher. There were some lenders that were in the marketplace at 80, 85 or even 90% loan to value. A lot of those products are very, very limited right now. So there may be slightly less loan to value. A lot of lenders as well have moved to increase their margin a little bit. Now, what that means is they're lending again, but maybe the rates aren't quite as attractive as they might have been in January or February of this year. And that's partly to do with slightly less competition. If you've got 15% of lenders out of the marketplace, then there's less competition between lenders overall. But that's also because a lot of the major lenders that lend on property are also lending on things like coronavirus business interruption loans. They're giving standard business finance. They may be extending credit or offering payment holidays to existing homeowners and consumers as well. And lenders are looking at this and thinking about how they make that money back over the long term. Remembering that a lot of big banks as well have investment operations too, and these investment operations have probably taken a fairly big hit as a result of the economic uncertainty worldwide around coronavirus. We've seen a lot of stock markets around the world take big dips, and that's going to affect banks and lenders' bottom lines, and so they need to make that margin up from somewhere. So be aware that some of the deals, some of the rates may have gone up slightly compared to what we were seeing right at the start of this year. Now, quite a few lenders are offering electronic valuations, desktop valuations, or some of them are calling them automated valuations, and they're also allowing more electronic submission of applications, electronic documents to go through, and also electronic signing in some places, which is speeding the process up and making it easier to do business overall. But they are picking and choosing who they lend to at the moment. And so if you are looking for finance at this stage, it's about being the best possible candidate for the loan. So that's about being organised. The lenders are looking for things like your last couple of years worth of SA 302s, proof of external income outside property. If you are looking for buy-to-let funding, good affordability within your property portfolio overall. So do make sure that you're organised, you're professional, you've got a good level of information available there, so you're putting yourself in the best possible light to qualify for lending. And this is one of the areas where having some external income, especially if your majority income comes from property-related income generated from rental income, the majority of lenders require you to also have some external service-related income. And this is where having a complementary business can be really important. Things like a lettings business, a rent-to-rent business, sourcing, repairs and maintenance, those kind of things that complements your property portfolio can be really important to your qualification for lending. The best one to my mind is sourcing. We teach about it on the Buy-to-Let and Property Entrepreneurship course. We coach people about it during the sourcing coaching program as well, and it gives you the best bang for your buck, and of course gives you that easy qualification for lending as well when those lenders are looking for that external service income. So that's definitely something to look at, and maybe a productive way of using your time in lockdown is looking at putting in place some steps to have a sourcing business business, we can obviously help you do that because we do run a sourcing coaching program that helps people set up their sourcing business over a 10 to 12 week period so that it's fully legal, fully compliant, gives you all the documentation you need, and you've got a coach there supporting you to make sure you're accountable, someone to bounce ideas off, but also someone to give you a kick along and make sure you're doing everything that you need to do. If you are interested in that, look at the link in the comments section below.